Good morning, everyone. Welcome to another edition of 2 Minutes with Todd. My name is Todd Jones. I'm the Chief Investment Officer for Gratis Capital. Thanks for joining us this morning. Let's take a look at some market activity from last week. And again, volatile market conditions persist as the war in Ukraine continues to press on, this time with Russian forces allegedly right outside the main city of Kiev. But you can see on last week's performance page how that's been impacting markets. And actually, it's a pretty bleak picture across the board, given the activity in stock prices. You can see S&P 500 was down for the week 2.8%. International markets were down a little bit less, down 0.55. Russell 2000, the small cap index, was down 1%. The bond market actually took a bit of a large hit last week, with the bond market down 1.7%. That's a very large weekly move. And the commodity markets actually took a little bit of a breather, down 2.3%. And of course, what's driving a lot of this price movement happens to be, of course, the situation that's going on in Ukraine and maybe possible resolutions. Interestingly, commodity markets took a little bit of a breather on the news that there might be some sort of détente between Ukraine and Russia, but we'll see how that situation all evolves, because I think the sides are still quite a bit of ways apart from finalizing any sort of terms to a ceasefire. On the first chart, I did want to just point out why we're experiencing some of this commodity price inflation. And you can see here on chart 1, Russia's share of global commodity production by category. You can see they are very significant producers in a number of areas, and then pretty large producers in other areas like natural gas and oil. Although, 17% of global natural gas production and 12% of global oil production wouldn't seem like a lot. We have to remember, of course, that a lot of new production and new sites globally haven't really been found or invested in more recently due to a number of factors, to include ESG or not in my backyard situations. And so, even though they represent a smaller percentage than you might expect, their absence of production is creating some of these major gaps up in price. One thing I would want to point out, though, not to get too negative on where markets are headed, is in chart 2, you can see here buyback activity within the S&P 500. And you can see that this year is expected to be one of the largest years on record for buyback. Because remember, last year, S&P 500 companies bought back around 1.2 trillion of stock to retire and put in their own coffers. This year, annualizing through February at a higher rate than 1.2 trillion. So that will represent a very significant buyer to stocks here as we move through the year. Thanks for joining us this morning. We appreciate your time, and we look forward to speaking to you again sometime soon. Thank you.
All price references and market forecasts correspond to the date of this recording. The information contained does not constitute research or recommendation from Gratis Capital to the listener. Gratis Capital is not providing any financial, economic, legal, accounting, or tax advice or recommendations in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by Gratis Capital to that listener.